Good afternoon, Scott Redler, T3 Live. Welcome to today's recap, the last recap of 2011 that I will be doing. This is also my last video because I'm going to be out tomorrow. So what a year it has been. If you want me to do a quick little technical recap of the three different moves that we've seen this year, the three macro technical patterns that could have made your year or lost your year, depending on how you read it, I want to do that quickly first, just to show you how, with the right training and the right set of rules, there are ways to make a lot of money in the market, even if you're just flat on the year. In the same way we've been flat on the decade, but there's been massive moves, and the only people who actually make money from these massive moves are the ones who learn how to navigate them. So if we take a quick little, trip down memory lane, take a quick look at the S&P. Okay, if you guys remember, what was pretty interesting, if you guys remember in the beginning of the year, you guys remember what this day was? Who knows what this day was? This was actually the day that we killed Osama bin Laden. The day of 1370 was the high of the year, a day that the market should have exploded, and we didn't. That was a day to take notice. And then obviously, you had this wide range bar, which engulfed pretty much this entire area that was also, somewhat of a day to take notice. So if you guys remember, as the market built, okay, it's head and shoulders top pattern. Everyone was looking here and saying, okay, will this happen? Will this time, can it ignite? Da 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 da. I talked about this pattern until I was blue in the face as it actually built. Okay, then you had a lot of things going on here. So you had your left shoulder, the head, the right shoulder. If you remember, this is when IBD put the market in a correction. So they saw the distribution days right in here in July as everything started to break down. So right here, this was your area where if you were, in tier 2, tier 3 long, you could have sold some. This was your area where if you were trading from a net long, maybe you switch to trading from a net short. And then, we targeted the 1250 neckline. So if you go back to this pattern here, you will see that here was your neckline, coming in. And this was what we talked about as the measured move from like 1360 down to 1260. So that should have given you a move to at least 1160 or so. But obviously everything always, goes a little further than you would like. And then this is what happened. Look at this move lower. After IBD put us in a correction, after we had this huge distribution pattern when we topped on the day that we killed Osama bin Laden. So anyway, by the way, you guys remember this? This was horrendous. Remember that short squeeze we got caught into July 4th weekend? that was a horrendous move that I know I lost a lot of money. I think I covered on this day. And then, but then, if you take away from that no memories, or you said, okay, it was just early here, this was the end of the quarter, this was new flows, whatever, and then said, okay, now's the time to get short, or even here, it didn't matter. What went on there. So you have to just switch gears again. So anyway, this was the move from 1260 all the way down to the 1100 area. So this was your, move number one into Osama bin Laden getting killed. Move number two to switch gears, go to a net short, considering we were in a market correction. And then you had this whole range. Remember, it came all the way into 1100. And then there was some choppy type of action. Okay, and then I remember drawing this line here. This was a bit of an uptrend that we broke to the downside, retested. And then the next major, did I say major? Day to take notice was right here. What was that date? October 4th. You guys remember that. I talked about that since I was blue in the face. Day to take notice, switch gears, bear loss control. I'm just talking to you, just recapping it in my head because there still was a lot of opportunity. I don't care what anyone says out there. Oh, trading's dead, trading's hard, the boxes are killing everything. I call bull, you know what? That's not true. You could have made 15% to the downside, and then on this upside move from 1104 to 1292, there was another 15%. You didn't need to make all 15% of it. You could have made 3 to 4 to 5% in the middle, or traded from a net, short or long position and created a lot of cash flow, even if it's a little thin trading, or there's a bit more high frequency type action, or a little less volume, or you name it, whatever you want to give, make an excuse for, there was action and there was tradable moves. It's not going to be easy. They're not going to hand out money on trees. Otherwise, everyone would be doing it and be swinging from them. Anyway, so this was that move. So if you look here, This was at 11:04. Okay, this was the October 4th reversal. This is when, you remember, we saw some commitment to the move. This was when I was on Bloomberg that day with Scarlett, and I talked about, it's okay to digest. Then you had the move above this recent downtrend, and then here was your flag above the downtrend, and then this was your continuation to 1292. I believe on this day we said, we could see 1250 to 1300. We went to 1292. So I know it was fast, and I know it was furious. I know it happened quicker than anyone would have wanted, but that was the type of market we were in. That down move that we had also was quicker and faster than anyone would have wanted. So was the up move. So you had to know when to switch that gear from first gear to second gear to third gear to fourth gear, because it happened quickly. So it's almost like when the money was there, you got to grab it and go. And then if you look for the continuation money, that was the frustrating part, because it was hard to make that. And then we went into this wedge that we've been building, this wedge of indecision. Can we continue higher based on what's going to happen in Europe? Can we continue higher based on the elephant in the room with China, if they're slowing, or the debt ceiling, or whether or not more countries lose their AAA status? So that's where we pretty much are right now. So if you go right here, this is this macro wedge, which is a pattern of indecision, not knowing whether or not it could continue from the October 4th low, or if it would come back and retest. So as of right now, as we head into the new year, things look more positive. Here's where this was your igniting bar. This is when IBD put us back in a confirmed rally. Okay, just so you know, every new fledgling rally or new confirmed uptrend doesn't always lead to a massive bull move, but it's never happened with that one. So if you go back to the chart, you have the low, you have a higher low, and you have another higher low. And if you remember, each one of these corrections hit the 61.8% retracement. Okay, that's where we bounced. So if you remember, we put this little Fibonacci retracement here. So from the low to the high, that's where it came into. We remember we did it again from the high to the 61.8 retracement. That's where we held again. And this time, we're not sure if we're going to get back down to this, but it's flagging right above. So it's still intact. So let me take these out of the way. So another useful tool, it definitely pushed the envelope. We were hoping would hold higher, and it definitely made everyone a little jumpy, considering all the gaps that were in here. And there were so many gaps, and they were definitely not easy to deal with, but they were there. And we can't control the gaps. We can't control the overnights. We can't control a lot of things. All we can control are our emotions, our disciplines, our money management, and the skill sets that we use. So as we enter into 2012, there's a lot of things that could happen, I know. And that's why it's a little hard to be massively long or even short, because you don't know when everyone gets a new allocation of funds and everyone has to start putting money to work. If they don't pull us in from here, they might trade these things higher. And that will create a nice move into first quarter of 2012, which I'm going to fragment that into a time period, not just the year. Right now, we have to break it up, and we're in a decent bullish mode where it's not a perfect world. We don't have breakouts galore. We don't have huge volume. We're not being led by the Russell or by tech. We're being led by the Dow and dividend stocks. But we're in a slow growth environment. We're not in a get up and go type of economy right now. We're in a slodgy, work through problems, get hit by a new problem, see if we can absorb it type of situation. So that's why people feel a little bit safer with mega cap names that have a dividend and have liquidity, and that's fine. So so some of these industrials that have had big moves, that have low P's and dividends, are doing well. Some of the consumer staples, even some of the refiners. So with that said, you have to really pick and choose some of the other ones that you deal with. So if everyone comes back and we don't get hit too hard, or the volume comes in and buys, you'll see in this chart right here, this could be a nice little level to break above and ignite another move. This like 1270 area, and this is 1277. So if volume comes in and they come in with new funds and start buying them, you're going to see it bust through here. Then you have 1292, a close above 1292. Then it puts this 1320 area on the map for the first quarter. So the question is, what do we have to deal with also next year? Second week of January, we start earnings. Are we going to get earnings like we saw with Oracle? Is IBM going to miss for the first time? They might. But we have to cross that bridge when we get there. You have a few weeks until earnings, so they could maybe squeeze every short before we start getting some of the announcements. So we have earnings. Then in February, we have the the Washington SH you know what show that's going to come back, involved because we only remember the payroll taxes was only put off for 2 months, so they're going to start doing their whole posturing in February. You also have in February some bigger auctions. Everyone was obsessing over Italy for this morning. That wound up being okay, which helped with today's move, but they have like 90 billion that needs to be refinanced in February, so do some of the other nations. So those numbers are getting bigger. So between really now and February, all you have to do is deal with some earnings and maybe some surprise announcements from some of these nations. But really, February is when Europe will come front and center again, and then you also have all the parliaments and everyone voting on whether they're going to ratify the fiscal plan from that huge summit, and that deadline is March. So February could be a little bit of a difficult month. So if they use all their new money in the first 3 to 4 weeks and we don't get a downgrade from S&P on France or some things that we have to deal with, it could push it, and then we just have to be careful because I think every few months is going to be a different obsession. There's always obsessions from the market, and usually we have a very good grasp on what they are and then what's priced in and what's not and what's the new one. We saw that this year, when yields started to go up, and first obviously we had Ireland and Portugal and all them back then, and then it turned into Italy and then Spain, and then they even talked about Germany when they had that bad auction. So we know what the rotation is there and then how to deal with it. So I think for the first part of the next month or so, there might not be as many headlines to deal with. So just really the price action. I think if we get through the first few days where they can't hit these things, people are going to have to pay up, and there are some vehicles that look decent. I've talked about Apple, I've talked about Google. Today they were actually good little scoops. If you look at, real quickly at Google came in and retested this prior breakout, and it was successful. So as long as it stays above even today's low, I think you got to stay long, which I'm going to try to. And then above, the 645, it could continue. I've shown you the monthly chart many times, and this monthly chart looks really good. I went over it on CNBC. Apple held higher. In my note, I talked about 398 to 402, Andrew. So if that would hold, that was a good buyable spot, considering that 409 held, as resistance. So if you look here on Apple, you will see, another different type of strategy where it hit resistance, right? Because look where it came from. This was a nice little buyable area, came up, hit resistance, going sideways, building a nice little flag here. So today I bought in that 402 area, and then if it gets above 410, we're going to fill some of this gap from this island top that controlled it. So there's something to look forward to there. Amazon was nuts. Amazon got downgraded by Goldman Sachs. Been very, very bearish. Last time I tried to do one of these outside reversal days, it got engulfed and nothing, it didn't amount to anything. Today I made most of my money short Amazon on the open and then got away from it. But then it reversed, closed strong. You want to put some volume in here. You will see that it did do it on volume on a day when there was not a lot of volume in the market. And look at the volume here. It happened. Tried to do it there and it didn't stick. So maybe here, and then you have this massive downtrend in Amazon that's been controlling it. So I would say today was a decent day, to cover these shorts and then figure it out. So right here, if I was short and we started going above 177, I would be getting squeezed and covered. So at this point, it's been a huge move down to this area. You have a reversal bar on volume. I would hopefully you covered your shorts today, and maybe we'll see if there's a trade that develops from this descending channel, perhaps to the upside. As far as some of the banks were stronger. JP Morgan, Wells Fargo, I think looked best out of that group. Goldman's not really acting well, and Bank of America, I'm long some, but whatever. As far as the OAHs, still holding in there, still in this channel, still in this inverted head and shoulders pattern. Some got stopped out on this day, but got back involved. I do think you could hold some. Some of these stocks in this group aren't acting so great. I think the refiners are doing better, like not the refiners, the distillers, or whatever, whichever they are in this group. XOM acting really well. We caught a cute little short, and now it's holding up pretty strong again. CVX looking good. Broke above this downtrend, holding higher. This one looks okay. I talked about Walmart today in the Sullivan Show. Looks really good on a daily chart. Looks like it's ready to get going. I know it feels like it came a long way. this year, which it has. This was the last time we had as a buy with Alex, remember, around 54. But then again, you go to the monthly chart, and you're talking 3,000 days. It's been stuck between 1998 and 2011. So maybe it hits this point and comes in a little bit and holds higher, but I think at some point this is going to break above 60. You have about, a $15 range within this 12-year channel. So that can give you, 60 gives you new highs here on Walmart. I would say at some point this year, you're going to hear new historic highs in Walmart. And if you look here, the big move it had from 96 all the way up into 98, that was a huge move. So it took a friggin' decade to absorb it. And now it looks like it can go again. My stock last year, my play of the year, was Home Depot, and it started clearing, a pretty big downtrend. Hopefully you guys held it. There are some things you could be a holder of. It looks even better on the daily. Nice move. So I guess that was a good stock then. Actually, Mike Lee gave me that one. And then I guess the ag, some people are saying they look good for next year. They still haven't showed their face yet, so I'm not even going to, well, maybe I'll take a look at the moo, see if it's mooing. Left shoulder, head, nice little, I guess, downtrend at some point, maybe breaks above. Mosaic came out with some bad news, and a lot of these stocks reversed, so that's a good sign. Means that they're discounting that for now. So I would say above this 47, 41, it could get a little bit better there. Gold, silver, I think that today was your day to cover your shorts. I do think we can get a little bit of a bounce, but I don't think that if you didn't buy today that you missed the dip to buy in gold and silver. I'm not exactly sure, but I'm thinking we get 14 to 1440. We've had a huge move lower, huge massive liquidation. So to me, that's a spot to cover, not necessarily a spot to put a lot of money to work. If you wanted to buy some and you sold it correctly and you saw a lot of these sell signals that we talked about in gold so many times, from this outside day right here to this inside consolidation with this bearish outside day to this down move, to the retest, to the macro wedge that wound up getting resolved to the downside, to the lack of taking back the 200 day. So at this point, maybe you see a move back to this 154 before it heads lower, but I do think that you do get a bigger move to this area. But again, look where it came from. Look at the move lower. It could churn a little bit more before heading down. So I just think either micro scalp it, but as far as if you did sell here, I guess you could get into a tier 1 here and still take the pain to this 1400, 1440. But then there is still some talk out there, which I think could be accurate also, where this is a big time long-term trend line that could get tested all the way back from years back. So just even though it came in a lot on the longer term chart, you will see that there still is some room there. So just don't make it like you have this golden opportunity. Just kidding. There is opportunity, but it just might not be golden yet. So I'm babbling a little bit. I'm trying to talk a little bit, little X's and O's, little strategy, little things to look forward to in 2012. What we saw this year, which was behind us now, and what we need to be able to deal with starting next year. But really, strategies are strategies, and they're only worth what you could implement them with. Meaning, there are a lot of guys that put strategies out there, but they don't know how to handle them. They lose money. It's that fine line. You have a strategy, you get excited about it, but then you buy too much, you don't hold long enough, you do it a day before it triggers, and you don't make money with it. So the real way to make strides as a trader is to identify in that process what you did wrong. Take accountability for it, change, and then perform better the next time. Did you have too many shares? Did you get in a day early? Were you not able to revisit it because you thought it would have happened a few days ago and it happened a few days later? Were you outside your risk parameters? What time of month was it? Did you have in your head whether or not it'll influence your paycheck? Were you trading your P&L or the actual idea? There's like so many things that traders have to deal with and learn from in order to keep evolving. But that's what you have to do year in and year out. I think I've been doing this since 1997, and I still evolve every year. I still try and change every year. And I'm going to do that again next year. And I'm going to figure out what I need to do in order to make more money. For me, I'm scattered. I'm in the media. I'm on the radio. I'm in here. I'm in meetings. So it's hard for me to trade and be involved in every one of the strategies I put out there. So I'm the offensive coordinator with the price point sheet and with off the charts. And a lot of times I like to be one of the best players on the field as well, but I'm not always there to do that. So, for you guys, you have the sheet, you have the strategies. I don't always have to be in every single one of them. Doesn't mean it's not going to work. So I know, I'm going to try and maybe push the envelope a little bit more next year where, maybe I do some longer term plays with some more stops on with a little bit more risk and still be able to handle smiling, not getting frustrated, leaving the desk for a meeting and be a little bit more of an active investor with the cash flow strategies as well. And I tried doing a little bit of that this year, and I'm looking to add to that because there's been so many people that make so much more money in my ideas than myself that, that was one of my frustrations. I'm like, okay, I need to change that. I can't get a thank you email from 20 people on a play that I put out there and me not do it. So, and granted, I can't do everything. So, there's that happy medium. So we all have these demons or these things we have to deal with in order to evolve and feel better. And the only way you're actually going to deal with them is actually look at them and not ignore them and take accountability for them. And if you keep doing that again, I think everyone will make progress. If you're here and you're a T3 Live subscriber, that means you're trying to take accountability for your financial future. You're trying to either professionally trade for a living, which can be done. You're also trying to navigate potentially your long-term 401k if you're in your 50s and 60s or whatnot, and you have a few $1,000,000 or whatever it is. You did see, I just showed you 3 different complexion changes that you could have saved yourself some money by selling when we, hit that head and shoulders top, maybe buying back, at that day to take notice, October 4th low. Not everything, but just a portion, 20 to 30% of your portfolio, whether you're in 70% equities and then you go to 50%, or then you go from 50% back to 75%. Just little ways you could do it to maneuver your portfolio, because when you're up 1% on the year in the S&P and you've had 3 different ranges of 10 to 15% that you could have navigated using short-term technical analysis with a little common sense and a little guidance from us, you could do better than the person out there that has a broker or just closes his eyes and thinks he's going to wake up and make money. So I'm still babbling, but it's okay. It's my last video. I'm allowed. This is T3 Live, my service. So if you don't want to listen to it, no kidding. Anyway, so with all that said, we hope for 2012 we continue to guide you through the markets. We all are going to try and strengthen our skill sets, from Mark to Evan to Mike Lee to Andreas to some of the new guys that are coming on that are doing really well. Robin the Black, awesome. I see you in the chat room every day and people are learning from you. That's great. I'd like to know how you came up with that name, but we'll figure that out, and I'm sure over some apps and some drinks at some point. And again, we want to grow the community. We want there to be thousands of eyeballs, because the stronger we are, the more we see, the more you have to bang things around with other people and ask them questions. Marianne in the morning, she does unbelievable updating everyone with the overnight news, and I'm not going to start naming everyone with Melanie and I just gave JRNY, awesome. Positive. Like everyone wants to contribute. Mike, I got you. Mikey Mike. Shaken, but not stirred. Anyway, did I have a liquid lunch? No, I'm drinking water. But I actually need a little bit right now. So, trying just to lay it out there. And the way I do it is on my sleeve every single day. I'm a trader first, a media guy second, a marketer second. That's how I make a living. I don't make a living by standing here. I don't make a living by going on CNBC. I make a living by trading the markets, navigating them every day. And that's hopefully what you are trying to do and starting to have some success with. So if we could all do it together in a way that we enjoy life and not take things too seriously and not sweat the small stuff, the market's always going to be here. The question is whether or not you could stay with it. So I'm going to end it right there. It's Thursday. New Year's is this weekend. Have a great time. Spend time with your friends, your family. Do whatever it is that makes you happy. Reflect a little bit about what you've done well and build on it. Reflect a little bit of the mistakes you've made so you can start correcting them. And then just get optimistic. Get excited for 2012. Listen to Steve Jobs' benediction. A few of the, what was the saying with Steve Jobs? Where was that then? He gave that speech about reinventing yourself. He gave that speech about how you can change your life. And it's been a long day, but I've watched it a few times, and I'm like, this is unbelievable. So whatever has gone wrong for you in the past, it doesn't mean game over. It's up to you to change it. So whether it's you bought the house at the high of the market, whether you're on your third divorce, whether there's a lot of things that could have gone wrong, but as long as you're above ground and you're healthy and you take accountability and you want to make that change, reinvent yourself, and get on a positive path. This is Scott Redler, T3 Live, the recap. Have a great and happy and healthy New Year's, and I'll see you in 2012.